It's been over 2 months since CNBC published this video, which suggested that the housing boom was over and a crash was coming, a relief to many young Americans who had waited over 17 months for prices to cool down. This video, along with many like it, turned out to be dead wrong. To the surprise of many, surging prices have continued to push up even in the hottest of markets. For millions of Americans, purchasing a home has become a nightmare. As we stand today, the average price of a single-family house, according to Zillow, is $351,000. And that's using August data. If this recent trend continues, by March of 2022, the average price will surpass $400,000. The question on everyone's mind is simple. How far can this really go? Will it soon be normal to see seven-figure listings in places like Ohio? In today's video, we answer exactly this by reviewing statements and data from the country's top housing experts, starting with Redfin CEO Glenn Kelman. Glenn has been on the air dozens of times interviewing with CNBC, and with access to some of the freshest and most in-depth data in the world, his forecasts have been mostly correct for 2021. This recent interview he did revealed some changes though. If you remember the last time he was on, he predicted a slight slowdown in the market, and while we have yet to see the data for September, it seems that no such dip has occurred and prices continue to rally up. When asked about the return to normalcy, he had this to say.
A little bit of a slowdown, but nothing major, and what's causing that?
Well, it's just a return to normalcy. So demand has slackened somewhat, but it's still strong. What's really new is that new listings are up about 10%. We haven't seen a real increase in inventory in a long time. It was hard to persuade sellers to put their homes on the market because they thought if we wait one more month, we're going to get more money. But now I think sellers have realized we're near the top of the market. They're more eager to get their homes listed and sold. And so it's easier to put deals together than it has been in a year.
So we're near the top of the market, you think?
I don't think you're going to see price appreciation of 20 or 25% for years. So prices may still remain strong. About a third of homes are selling in a week, but they aren't going to be shooting through the roof the way they were in the spring or last fall.
So there you have a rare, clear prediction from a big-time CEO. But there is a slight problem. Kelman claims that we are likely near the top of the market, but then sort of contradicts himself, saying that prices will likely continue to rise, but not at this outrageous pace we are witnessing today. Remember, from 2020 to 2021, home prices have gone up around 20 to 25%, and in his opinion, this pace is unsustainable in the long term. Judging from that, it seems to me that Glenn is predicting a top in the market for home price growth, not home prices in general. What he's saying is that prices will continue to rise, but the pace at which they rise will slow down significantly. How he's predicting this, nobody knows. If he is wrong and the growth rate stays at 25% per year, the average single home in America will cost $1,071,166 5 years from now in 2026. That on paper does seem impossible, but if you look around the world, that figure isn't all that crazy. For an example, in Norway, the average detached home costs around $7,000 per square meter, which means a modest 1,000 square foot home will set you back around $800,000 US. I'm unsure what stats Kelman is using to make such a long-term prediction, but from the inflation standpoint, there is evidence emerging that home prices could keep this pace of growth for quite a while. While everyone scrambles for answers and looks to the pandemic as the reason for this jump, now, almost 2 years later, we are not taking our foot off the accelerator. More and more money is entering the system. Zillow president Susan Daimler went on CNBC even more recently to speak on the situation. Glenn and her have the same exact playbook, claiming that they both see a slowdown or cooling off period in the market. Listen to her talk about the housing market going from white hot to red hot.
New home sales rising 1.5% in August, increasing for the second consecutive month, according to the latest report from the Commerce Department. Year over year, new home sales were down nearly 25%. For more on the housing front, let's bring in Zillow President Susan Daimler. Susan, thank you so much for being here. I understand that you actually see some signs that we're actually getting to a more healthy housing market. What do you mean by that?
Yes, thanks for having me. Great to be here. So we certainly are. What the data is showing us is that we're moving from this, what was this white hot market to a red hot market. And you said some of the signs. We're seeing inventory rise month over month for the last 4 months. We're seeing home price appreciation cooled down a little bit. And these are good things. These are signs that there's this healthy rebalancing coming, basically making the market more sustainable and giving some optimism to buyers out there and some much needed relief. But relatively speaking, again, this red hot market is still there. Total home sales in 2021 will be more than they were in 2020, and in 2020 they were 15 times higher than they've been in the past.
So there you have Zillow president making essentially the same claims as Glenn. The problem with these claims is that they give us no evidence as to why they believe this. In my opinion, you can look for various variables to explain the recent housing surge, but one that is clear and in your face is inflation. You never hear him say that word, and I don't think that's an accident. This entire bubble, in my opinion, is created by the US Federal Reserve, who still to this day is buying up mortgage-backed securities, pouring gasoline on a white-hot fire. I'll give you an alternative angle to think about. There are plenty of smart decision makers at these companies. They are well aware of how likely prices will continue to rise, not because of a generational wave or any other market cycle reason, but because they are seeing what everyone else is blind to. The Federal Reserve will do everything in its power to prop up the housing and stock market. They are not raising rates anytime soon, and inflation will be ignored for as long as possible. This leads to a couple of things. One, investors begin piling in as prices rapidly rise month to month. Buying up residential real estate becomes easy money, and this in turn fuels even higher prices because demand increases. Residential housing starts to look more and more like tulips. Part of the reason Zillow has the iBuyer program, where they pay outrageous prices to buy up homes and later sell them for a profit, is because they know what's coming. And while they look to perfect the algorithm that drives these offers, soon enough they will have the market cornered, and general everyday people will now be competing with billion-dollar corporations. Right now, the market is between normal everyday people with a real estate agent in between to ensure fairness and ease of business. Soon, the real estate agent will be gone, and instead you'll have a strong and powerful corporate middleman raking in massive dollars acting as a residential housing retailer. Now, a lot of people have made videos on why this is just Zillow trying to dominate the market, even if it means taking a loss, but I strongly believe their behavior is influencing prices, and in the near future, we'll see the impact of this investor influx. In my opinion, prices have a long way to go before anything cools down. A market crash will not happen as long as the Fed keeps the rate at near zero and pushes its MBS buying program to the limit. If you're now in the process of purchasing a home, let me know how prices are in your area by commenting below. Thank you guys for watching. As always, please make sure you hit that subscribe button and like button.